Welcome back to today's Morning Report chart analysis videos on Monday the 19th of September with me, Richard Perry, market analyst at Hantech Markets. Moving on to Eurodollar now, and we had that big breakdown on Eurodollar on Friday on the back of that CPI data from the States that was just crept higher and ahead of expectations as well. So that strengthened the dollar, and the euro hasn't really unwound from that. Pretty much across all the FX majors, the losses that they found against the dollar on Friday have been sort of retraced to a certain extent, but the euro, having earlier had some gains, is now just sort of lost all those gains. About 20 ticks up it was at one stage, but it's now just completely unwound that, and it's back to basically flat on the day. I think ultimately this is going to settle in front of the FOMC decision, and you'd say that the medium-term and long-term outlook still remain fairly neutral, but the near-term outlook, I suppose, with that breakdown, was turned a bit more negative. You see the stochastic scanning got tracked downside, the RSI below 50, MACD line is also pulling lower, but I think ultimately the support is 1120, which is this reaction low from September within this sort of consolidation. But I suppose the uptrend comes in the middle of the two long-term pivot bands between 1150 and 12 figure, 1050 and 11 figure. So you'd still say that you're fairly well positioned to be neutral on the euro dollar. There's nothing really that would suggest that you're going to see a break technically either way, and I think it's going to be a big fundamental move that makes the shift of outlook, and I think that you could see that from the Fed depending on how it comes across on Wednesday. But for now, I think the euro is just going to start to settle. Yes, we've had this big bear candle, and yes, you could argue that would give you a bearish price that perhaps you should sort of start to edge lower with in terms of your sort of outlook. But as I said, in front of the FOMC, I think it's going to be flat. And I think this support, I did say on Friday that I thought the support at 12 figure was going to hold. Well, that was obviously the near-term support, but the big support near sort of in the last few weeks has been that 1120 mark, and I think that will hold in front of the Fed. So on a near-term basis, you could argue, yes, that old support, 12 figure, becomes new resistance, and selling into near-term rallies is the way to play it, because obviously the configuration now is pretty negative, and it's just going to be, that move this morning was literally just an unwinding move before the sort of sellers came back in. But I think I'd be surprised if that 1120 level was breached in front of the Fed. So I wish you good luck in your trading today, and I will speak to you later.